This is a better thought of as an AI firm or as an EV company. Can Tesla hold its own in this competition to be the top company in the world? These are some of the inexplicable why inquiries that people have. Because the answers twos have the potential to increase or decrease your wealth. Address these queries and their current status in this video. We will also hear Ives's perspective on Tesla. Tesla has been refining all facets of their business, including their AI and electric vehicle divisions. Apart from that, they've been working with other businesses. To learn more, continue watching, but not before giving this video a thumbs up and subscribing to Tesla Stock News. Regarding Tesla, various fascinating viewpoints about its identity have surfaced. Although most people consider Tesla to be an electric car manufacturer, there is a growing belief that it is actually an artificial intelligence firm. A change in viewpoint like this might have a big impact on the company's future, especially in light of all the hype surrounding AI. Notably, Wall Street analyst Ives views Tesla as a tech business and thinks the company would gain a lot from the current wave of artificial intelligence. Being one of the best analysts, his opinions are highly respected, so it is much more worthwhile to investigate his point of view. Let's discuss the general health of the tech industry before getting into AI. Ives predicted that tech stocks would rise by 20 earlier this year, and as of May, the NASDAQ had already jumped by 24. So the question is, what is the remaining amount of growth potential? Ives believes there's still 10 to 15 upside left in the tech sector. Strong fundamentals, better than expected forecasts, cost-cutting initiatives, and the idea that the tech sector is a safety net are some of the reasons for the confidence. The iRevolution, which Ives views as his career's most revolutionary tech subject, is actually what will change things significantly. Propose that AI and Tesla's future may be closely related.
Yeah.
First, perceptions of Tesla as an AI firm may be sluggish to develop, but if it becomes evident that the company is well positioned to address autonomous driving, opinions may quickly change to accommodate this viewpoint. Ives has taken inspiration from two prominent figures in his thinking. James Damer, who you should follow, and Hallmark's collection of complete self-driving movies shot in San Francisco. To what extent does Ives think Tesla can actually become an AI company? While there are engineers employed by Tesla in Vancouver, the performance level is higher in the San Francisco footage. Ives is more confident in Tesla's Dojo supercomputer's chances of success, even though Elon acknowledges they are slim, especially in light of Elon's prior successes with SpaceX and launching the electric vehicle market. Ives' conservative projects that, given the market potential, artificial intelligence, it represents a $800 billion market opportunity with potential to reach trillions of dollars. This outlook contradicts worries that the current scenario resembles an AI bubble. Ives makes the case that it's more like a gold rush, pointing up NVIDIA's phenomenal rise in their historic 16 quarterly projection hike. This expansion affects NVIDIA and has repercussions for hyperscale firms such as Google and Microsoft. It also has resonance with Apple and Meta, among other companies in the consumer tech space. Ives highlights the wider ramifications for the chip business, software brands like Palantir and Salesforce.com, and the tech sector as a whole. Even with all of the hype surrounding AI and the possible gold rush, some investors still find it difficult to accept Tesla as an AI firm. The historical performance of the stock shows times of relative stagnation interspersed with notable swings. For Tesla investors, though, the difference might not be as significant. Whichever way the company is categorized, it has proven to be able to fascinate the market, and investors tend to have short-term views. Looking at Tesla's past reveals that there have been huge advancements at certain points that make earlier developments seem irrelevant. There have, however, also been times of consolidation during which the stock stays unchanged for roughly 5 years. Things have started to get better recently, with Tesla gaining a lot of traction and growing rapidly. It's anticipated that the current consolidation phase will finish once it's widely accepted that Tesla is essentially an AI corporation. As we talk about other businesses in this industry, the question comes up: are there any cheap possibilities that haven't seen their value soar yet? What distinguishes the victors in this field from the losers? The companies Microsoft, NVIDIA, Google, and a few more are thought to be the apparent winners. Investigate second and third derivatives in software like Salesforce.com, which appears to have unrealized potential. Given their fundamental interest in AI, controversial names like C3, high and sound talent here are also worthy of consideration. Ives also thinks Tesla will benefit greatly in the long run from the AI revolution. He's only getting started on an exciting adventure, and this week's differentiation was very obvious, indicating that the race is officially on. Now let's talk about electric cars. Tesla is a clear winner here, as its stock has increased by roughly 6. It has even eclipsed the Toyota Corolla in sales to take the top spot. In addition, Tesla shocked everyone by declaring a collaboration with Ford. The stock price of Tesla has surged much to the satisfaction of investors, even though drivers may not be thrilled about sharing their superchargers. This collaboration may also impact Ford's business model. It is noteworthy that Tesla currently holds a market share of more than 50 in the United States. As a result, even if someone had planned to buy a Ford EV, they might decide to buy a Tesla instead after weighing their options. As more electric vehicles available on the market, Tesla stands to gain significantly from this alliance. Finally, just a day ago, it might have seemed unreal that Jim Farley and Elon Musk would co-host a Twitter Spaces event. In actuality, though, Ford and Tesla have both realized how important cooperation is. Ford recognizes the value of the Tesla supercharger network, and Tesla knows that its success depends on the success of General Motors and Ford. This surprising partnership highlights how quickly the automobile industry is evolving and how fiercely the competition for market dominance in the electric vehicle space is intensifying. It's obvious that the game isn't zero-sum. Even while some might wonder why Tesla needs Ford and GM to be financially successful, it's critical to understand that other manufacturers' performance supports Tesla's goal of accelerating the shift to sustainable energy. However, what are the practical benefits for Tesla from this? Let's examine a couple of arguments. Tesla superchargers would surely make more money if Ford and GM made use of Tesla's infrastructure for charging. Furthermore, if Tesla were to provide specific parts, like batteries, to these automakers, it might create an unanticipated new market for the company. Long-term benefits of licensing Tesla's fully autonomous driving technology to other businesses are also evident. It is important to remember, though, that Tesla does not always rely on the performance of other automakers until there are worries about government intervention because of a possible monopoly. Tesla is able to prosper on its own. Since Stellantis and other automakers haven't completely embraced electric vehicles, it's clear that Tesla's hegemony isn't unchallenged. It's critical to understand that alliances between Tesla and other automakers are reciprocal, beneficial. In this EV poker game, Ford CEO Farley seemed to have made a wise choice. Offers Tesla the chance to make more money off of the network of superchargers. Ford may use Tesla batteries as a result of this partnership, which would be a huge modernization step. However, given Tesla's high battery demand and the restricted availability of their new 4,680 batteries, other automakers may have a long way to go before using Tesla batteries extensively. Although the reason for Ives' assertion that Tesla requires Ford and GM in order to succeed is still unknown, recent events at the Tesla Gigafactory in Nevada provide some insight. The tour yielded several important takeaways, chief among them the astounding advancements in battery manufacture and innovation. Tesla has significantly lowered the cost of batteries by optimizing operations. Due to this advantage, Tesla may be able to provide EVs for less than $30,000 in the years to come, something that other market participants are still working toward. That's possible that Ives' observations during the factory visit convinced him that Tesla might begin supplying other automakers with batteries. So while this may not happen immediately, it would be a beneficial outcome for Tesla, as an overstock of batteries would allow for a speedier shift to structural battery packs powered by the new 4680 batteries. This would raise profit margins or drive down car prices, increasing the value of Tesla's stock. In summary, the competition to produce electric vehicles is intensifying, and Tesla is leading the way in battery innovation and production. Although the precise timetable for Tesla's engagement in providing batteries to other manufacturers is yet unknown, the advancements achieved at the Gigafactory suggest that these collaborations may occur. Tesla's position is strengthened with each new technological development, and the company's stock value keeps rising. Tesla has the unquestionable potential to become a huge success as an AI firm, and we shouldn't be shocked if the rest of the world realizes this. That's it for this video. Please hit the like button and be sure to subscribe to Tesla Stock News. If you enjoy it, we appreciate your time, and we'll see you in the upcoming video. Overseas.